Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a Form 8K from Zoomcar Holdings, and let me tell you, it's a bit of a bumpy ride. Think of it as a financial roller coaster full of twists, turns, and maybe a little bit of hoping you don't lose your lunch. We're talking about warrant resets and potential claim settlements all wrapped up in a stock split package. Buckle up. Zoomcar, a company that lets you rent cars by the hour or day, announced some updates related to a previous agreement they made with investors. Back in December of last year and January of this year, Zoomcar made deals with some investors to sell them company stock and what are called warrants. Warrants are basically options to buy more stock in the future at a set price. They were hoping to raise between $4 million and $30 million through this offering. They had a first closing in December, raising about $5.48 million, another $1.4 million, second closing in February, bringing in another $1.44 million, and a second closing in February, bringing in another $1.44 million. All of that was detailed in previous reports they filed. Now, here's where things get interesting. On March 18th, the company's board of directors decided to lower the reset price of one type of warrant called the Series B warrants. They lowered it all the way down to what they called the floor price, which is each $3.12. Think of it like this. The original price to buy those extra shares was higher, but they're now giving investors a deep discount. This change will take full effect with an event happening on March 21, a reverse stock split. So what's a reverse stock split? It's when a company reduces the total number of its shares outstanding. Imagine you have 10 slices of pizza, and a reverse split means you suddenly only have one slice, but that slice is now 10 times bigger. In Zoomcar's case, this bigger slice after the split means the warrant price will look like $6.24 instead of the split means the warrant price will look like $6.24 instead of the $0.31 toll. The company agreed to make the date of the change effective immediately. This means these Series B warrants can now be used to buy a lot of stock up to a limit. They're doing this at this newly reduced price, but with some rules about how much of the company those investors can own. The board also gave the go-ahead for the company to settle some outstanding claims or potential claims against it. They're planning to do this by giving the people making those claims some of these stock and warrant units from the same offering. This is like saying, instead of fighting this out in court, here's some stock and we'll call it even. Now, the filing also includes what they call forward-looking statements. These are basically guesses about what might happen in the future. And the company is saying not to rely too much on these guesses. They remind everyone that things could change, and what they expect to happen might not actually happen. They mention that these forward-looking statements are related to settling claims against the company. The company uses words like believes, eeks, and anticipates. To show these are just predictions, they also point out that there are risks and uncertainties that could cause their actual results to be very different from what they're predicting. They list a bunch of documents where you can read about these risks, like their annual report and quarterly reports. The company says they're not planning to update these forward-looking statements unless the law makes them do it. So basically, take these predictions with a grain of salt. Finally, the document lists one exhibit, which is the interactive data file. This is just a technical file that helps computers read the data in the report. Now, let's step back and look at what this all means for Zoomcar. Zoomcar seems to be trying to raise money and resolve some legal issues at the same time. Lowering the warrant price is a way to encourage investors to buy more stock, which brings in cash. Settling claims with stock is a way to avoid costly legal battles and get those issues off their plate. It suggests that the company might need that money. However, there are potential downsides. Lowering the warrant price could dilute the value of existing shares, meaning each share is worth less because there are more of them out there. Settling claims with stock also uses up some of the company's equity. The reverse stock split might make the stock price look better, but it doesn't change the underlying value of the company. Overall, this filing suggests that Zoomcar is facing some challenges and is taking steps to address them. These steps could help the company in the short term, but they also come with risks. Thanks for watching. If you found this decoder ring helpful, please like, comment and subscribe for more plain English corporate analysis.